everybody. Morning? Is it morning? I never know what time it is in Davos. Good morning. Welcome to this panel. I'm very excited to be here. My name is Sarah Eisen. I'm a host of CNBC, where I do a show every day, 10 to noon Eastern time. We're going to talk about the global banking system with the right people. We're going to talk about whether banks are prepared for the future. We're going to talk a little bit about how banks are doing right now. So I'm very excited to introduce our distinguished panelists. Sergio Armani is the CEO of UBS. What did the March episode teach you, Sergio, besides that you're going to have to come back in and lead the UBS?
Well, that was clearly a surreal moment. But I think what has told me is that, in essence, regulators should be very happy, and banks that implemented the more stringent regulation after the financial crisis were solid, broadly speaking, other than one idiosyncratic issues, which were part of the solutions and part of a safe haven event. So when we saw lack of trust and in the system, the large banks were a place to go. So in a sense that a focused and well-designed regulation has helped to make the system more resilient. And it's very important that we now look at the post-mortem and in a very focused way. The fact that the banks that were vulnerable were not subject to stringent or more stringent regulation, which is almost elementary regulations around how you manage your interest rates book, your liquidity. It's something to be spoke about in order to avoid further crisis. Also, that I wasn't surprised, to be honest, that the new world, the digitalized world, would translate into a faster outflows of money. I was surprised that. For example, that was not recognized ex ante by regulators. And lastly, I would say...
What a bank run in the matter of hours.
Yeah, what technology and what uninsured deposit base means in a digitalized world. And the second one is, broadly speaking, particularly in the US, this disconnect between monetary policy and prudential policy. So once you go into a huge and rapid hike of interest rates, not realizing what would happen to your weakest link in the banking was a little bit of a surprise for me.
So let's get into regulation later, because I know you have some opinions about Basel III. But, so you both ended up, you ended up with Credit Suisse, you ended up with the First Republic. Were you surprised that the regulators let you acquire that? And it does feel like the big got bigger as a result of what happened in March. And I don't know if that's a good thing or not.
I don't think either of us would use the word let.
Let?
Yeah.
What? Forced?
We were asked.
Asked.
Well, you were forced.
Well, I wasn't there, but I guess it's fair to say that, and which was one lesson also out of the crisis, that you got into, in order to be asked to be part of a solution in addressing a crisis, you need to be credible and prepared. And the business model you pursue leading into that moment is very important. Because, in the last few years, we saw a lot of crises. You mentioned a few of them that we are facing or challenges. And it's nothing different than what we saw in the last 10, 20 years. So that's a constant. So what you need to do is always to be prepared for the unexpected. And one of the scenarios you need to play is how you take commercial advantage in organically or non-organically in a crisis. So you need to be prepared.
Right.
So when you do that, then you need to realize that in banking, M&A happens mainly in crisis. If you look at the US banking system and the dominance of the big players, not only in the country but also outside the country, has happened as a big consequence of the financial crisis. The consolidation that happened during the financial crisis was the differentiating moment between the US and Europe. In Europe, the decision was, let's try to make them smaller and irrelevant In the US, the design was, let's make them stronger. So in a case, are we larger? Yes. But are we stronger and more diversified? Yes. That's what matters.
Right. I mean, a lot of people think you got the deal of the century. Slawomir,
That one we can talk about.
Did you not?
I already mentioned it. It's the prize of the century, not a deal of the century. In order to be the deal of the century, we need to work hard in the next 2 or 3 years and unlock the potential. You know, it's not a present, it's nothing for free. So still our work to be done.
It wasn't free, but what was $3.8 billion? It's a shell of what it once
You
was.
are welcome to join the executive board and help us in implementing.